What is going on, guys? Welcome back to another video. Thanks for tuning into Stock Essentials. My name is Alex. We're going to be going over SmileDirectClub, ticker symbol SDC, which is doing amazing in the market right now. As we can see, all-time lows was around $4 per share, $4.63. So it's still at really low levels. As you can see, the past year down 42% in the past, and overall it's down 66% since it became public back in September 2019. So this stock is the target of a short squeeze. It is one of the most talked about stocks on Wall Street bets right now, and as we can see, 15% on the day, 33% on the past week, and it's just nonstop going up. So if we take a look at the Wall Street bets mentions, we can see it's definitely number 2 on the list for the most talked about stocks, with over 300 mentions in the past 24 hours. So there's definitely a lot of volatility going on with the stock, and we're going to be going over all of the data and see whether or not you should play this stock for a nice short squeeze. As you can see here, a lot of mentions on Wall Street bets, and a lot of people are throwing in their money into the stock. A lot of FOMO buying, because once someone sees like a huge run up going up like this, constantly going up, it's had 2 amazing green days in a row. A lot of people are going to throw their money in because they want to get rich. They want to get a lot of gains really quickly, and playing these high volatility stocks is one of the quickest way to do that, but it is risky. So if we take a look at the volume, average volume is around 18.5 million, and the volume yesterday was 38.83 million. So over doubled the volume. So a lot of people are really looking at the stock. A lot of trading volume, a lot of volatility, and a lot of movement with the stock price being at around $5 per share before the Wall Street bets crew, the retail investors, decided to buy the stock. So we take a look at Wall Street bets. Of course, we got a lot of mentions, and this one here, right here, this guy put in $300,000 worth of money into SDC shares. So that's going to be almost 45,000 shares. Pretty big amount of money. And there's a lot of people doing this. A lot of people are throwing in tons and tons of money into SDC because it is a relatively cheap penny stock. And it has a lot of volatility. So this stock can definitely explode. As mentioned earlier, it's still down 42% in the past year. So this is still a relatively cheap price, undervalued stock. That really got hit hard due to the pandemic, as with most stocks. But this definitely is a nice company for the long term. It definitely competes with Invisalign, but the main difference is that there is no physical locations you have to go to. It's all done remotely, which a lot of people like. They don't want to have to visit the dentist's office. It's just a little bit more convenient. So without all of those overhead costs of a physical location, they're able to keep the price much lower. So it's about a half of the price of Invisalign when you have to go to the your regular dentist. So that's why people are very interested in SDC, and it is a great alternative to Invisalign. But right now, a lot of people aren't really interested in dental stuff, so this definitely is a recovery play once everything gets back to normal. As we mentioned earlier, tons of Wall Street bets mentions, and another good thing is short interest is pretty high as well, being at around 34.43% of the free float. Dark pool volume is around 28%. Pretty big amount, not that much compared to AMC, but there is a really high short interest, and that's why a lot of Wall Street bet traders are targeting this stock. So take a look at the option summary for SDC. Call to put ratio is 83, which means a lot of people are putting in a lot of premiums for call options, which makes the stock price go even further as well if you buy call options. So the flow is very bullish. A lot of premiums are being put into the call options. Implied volatility is pretty high. Overall, it looks pretty good. And if this stock can continue skyrocketing throughout the rest of the week, we could see a nice gamma squeeze, which in turn would trigger the short squeeze because the shorts cannot hold onto their positions forever, and they definitely do not want to lose money. So they will have to cover their positions at a loss. So take a look at the options chain. Lots and lots of gains for people who bought call options expiring October 8th. Tons and tons of money to be made. And the question is, how do we play into this stock being up 32% in the past week? Well, this is a relatively cheap price stock. So if you're in it for long term, you could just buy and hold shares. It's $7 per share. It definitely isn't an overpriced stock. So you could just do that, or you could play options. So you could either buy call options, or you could sell puts, because this is a relatively cheap price stock. So call options as well as selling options isn't going to cost you that much. This is perfect for people with small accounts looking to grow their money relatively quick. But you do have to understand the risks. It is a very volatile stock, and with all volatile stocks, there is risk associated with because you can lose a lot of money if you're not careful. So, what call options should you look at buying? Well, let's see what people are buying first of all. They're buying call options for 2022. That's a really smart idea because the decay isn't going to hit you as hard. As you can see, the options chain, it's not that expensive for, say, a $10 call option. It's only going to cost you 92 bucks. So you could buy a few of these if you want, and you have around 3.5 months of time on these contracts. So a lot of time for the call options to play out, and it's relatively safer than just buying weekly options on the stock. Of course, if you want to be a bit risky, you could of course buy some of these call options. It's going to cost you like 20 bucks. It's not that expensive at all. But recommendation is buy it a few weeks to a few months out to give yourself some time, because this definitely is a good stock. If you want, you could sell some cash carried puts as well, because we know the premiums for the contracts are pretty high, as implied volatility is absolutely soaring. So I do have an existing cash carried put at the $5 mark, which I will probably close out tomorrow. But what you could do is you could just sell weekly put options on the stock. Say you want to do a $6 cash carry put right here. So basically what this means is if SDC stays above $6 by expiration, which is October 8th, expiring in 2 days, you're going to be collecting your premium, your credit in full of $15. That might not sound like a lot. If you take a look at the calculator here, it is going to be a pretty decent size return. $15 divided by 600. It's going to be a 2.5% return in 2 days. So if you put a lot of money into it, it's definitely going to give you a really nice return in just 2 days of expiration. Now, of course, $15 isn't a lot, so you could of course sell multiple contracts. Say you want to sell 10 contracts. That's going to be $150 of credit in 2 days, putting down collateral of $6,000. So basically, if SEC happens to drop by Friday below your strike price of $6, you have to buy 100 shares of SDC at $6 each, which is not that bad of a cost basis. And if you do get assigned shares, you could just do the wheel strategy and sell covered calls once you have 100 shares. And of course, you could sell contracts for next week, expiring October 15th, and you can do like a 5.5 strike or even a $6 strike. Pretty high chance of profit. And overall, there's a lot of bullish flow, so you could even do an at the money cash carried put if you're overly bullish. So that's about it for this video. Quick little update on SDC. Please leave a like, comment down below if you have any questions, and of course subscribe if you're new to the channel. It helps out a lot. Thanks for watching.